Knowing who is the richest man in the world is a question that often comes up in the media. It is clear that the question is not simple. For everyone, when you have a salary, savings, and a house, calculating your wealth is quite simple. On the one hand, you have wealth in income, often a salary, and on the other hand, you have an estate with a liquid part, your savings, and an illiquid part like your house. By adding all this up, you know how rich you are. On the other hand, when it comes to entrepreneurs or large fortunes, everything gets complicated because counting what is valuable or not becomes complicated. According to Forbes magazine, which focuses on the rich, Jeff Bezos is chasing after first place with about $170 billion, while Warren Buffett is in seventh place with $90 billion, behind a Chinese guy that nobody knows. Except that here, Buffett owns a group that has a lot of well-established companies, while Musk and Bezos own a very small number of companies, some of which are the subject of very strong speculation, not to mention Amazon and Tesla. So I ask you, is Uncle Warren really out of it? Or are the alleged fortunes of Musk and Bezos a little piped up? Come on, let's go. In order to fully understand how a business is priced, it is important to understand that a business can be priced in two ways. Either we look at the past or we look at the future. If we look at the past, then we look at what the company owns and how it financed it. It has a name. It's called the balance sheet. In a balance sheet, the left side, the assets side, is an inventory of everything the company owns. On the right side, the liabilities, it tells you how the company financed it. Contrary to what I often hear, liabilities are not something negative. Liabilities are not the amount of debt you have. Personally, in my business, I have no debt, and yet the liabilities always equal my assets. In the table you see, in the liabilities column, there is equity. In short, when you look at a balance sheet, you are looking at a company's past up to the balance sheet date. Once you do the assets minus the liabilities that are shown on the liabilities side, then you get another indicator called net assets. What is interesting is that you can get the value of the net assets by looking at the price-to-book ratio, which means the share price relative to the value of its balance sheet. So, first of all, let's assume that the main basis of Bezos' wealth is Amazon, that Musk's is Tesla, and that Buffett's is his holding company, Berkshire Hathaway. Here is the stock market value of these three companies. Amazon, $1.65 trillion. Tesla, $820 billion. Berkshire Hathaway, $577 billion. So there, Warren is getting cut short by Jeff and Elon. But if we relate the value of these companies to their price to book, i.e. to the value of their balance sheet, it changes somewhat. Berkshire Hathaway, 577 over 1.5 equals $384 billion. Amazon, $97 billion. And finally, Tesla, $17 billion. There, Warren Buffett comes back in force with his holding and beats the two tech stars at the post without a single blow. But then, how is it that Amazon can be worth $1.65 trillion when its net assets are only $100 billion? Where's the trick? Well, the markets estimate that Amazon is worth $1.55 trillion more than its net assets because Mr. Market thinks that Amazon has a whole bunch of advantages that in the future it is going to break all records. In other words, the net assets, the past, who cares? It's the outlook that counts. And the outlook takes into account not only the company's internal capabilities, but its entire macroeconomic and financial environment. If interest rates are at 0%, if inflation is likely to pick up again, if the pandemic could return, and a whole host of other factors assimilated by the market. But who's right, the accountants or the market? How do you assess the fortunes of rich people for real? Well, that depends. Typically, in the case of Elon Musk, I have no doubt that in the event of Elon Musk's death tomorrow, Tesla's value would drop like a stone. Market expectations are so tied to him that it is impossible for him to sell Tesla without causing the price to plummet. As a result, his $170 billion personal fortune is completely virtual. Maybe one day he will have it if the promises made in the market come true, but in the meantime, he can sit on it. On the other hand, in the case of Warren Buffett, especially given his great age, if he sold to give it all to a multitude of associations, or if he died tomorrow, the value of Berkshire Hathaway would remain globally stable because this holding company has well-established companies and not especially overvalued. This is reflected in the price to book of 1.5 for Berkshire Hathaway, while Tesla is trading at around 50. As for Amazon, 17 is not bad either. It is very difficult to say what is a reasonable price to book level because it depends very much on the sectors. However, between 2 and 5 is not crazy. There. It is this vision between the past that we call the tangible value and the future that we call the intangible value that is often the truth, if it exists. Beyond the case of each other's fortune, which basically has no other interest than to arouse your curiosity, I wanted to bring you to a second reflection. Does a company that distributes dividends have more value than a company that does not? And yes, dividends are real money somewhere. You can spend it and its value doesn't vary according to the value of the company. So, is that better? There are two perspectives. From the point of view of the director or the big shareholders of the company, the proverb in terms of valuation of a company is rather, not sold, not earned. Elon Musk can't sell his shares or else the price will drop and he won't be able to sell. So, in the case of Musk and Bezos, it's not really real money, their fortunes. On the other hand, in the case of Buffett, yes, the valuation of his group corresponds to something that can be converted into money. Well, apart from these problems of the rich, at your particular investor level, it doesn't matter. If you buy a Tesla share, no matter how speculative it is, you can sell it whenever you want and you won't make the price fall, even with 100,000 euros. So here's the question to ask yourself when you want to choose between dividends or growth. Do I think that the last euro invested in this company will have a higher return than what I can find on the market? For example, Jeff Bezos used to say to his shareholders, "No dividends, we have real plans at Amazon, so either you're with us or you sell and leave us alone." Because Amazon is a growing company, the shareholders have always accepted this deal until today. To have money, all you have to do is sell shares. In contrast, multinational companies such as Caterpillar, Coca-Cola, or McDonald's, which are already very well established in their markets and do not have investment prospects as huge as Amazon, distribute high dividends on a very regular basis. So in the end, apart from the tax issue, this dividend story is quite significant for big shareholders and big bosses, but completely neutral for investors like you and me. When you invest, ask yourself instead whether you want to buy future prospects or leading companies that benefit from an annuity on their historical position. This is where the choice lies. Besides, it's not even a question of risk, since an annuity business can be riskier than a growth business. But that's another story. To conclude, from a long-term investment perspective, when you want to invest in a company, don't look for a shot, but rather ask yourself if it is a company you want to keep indefinitely. Are you confident enough in its business and development model to keep it for 40 years? In any case, you should know that this is the perspective with which Warren Buffett chooses his investments. On that note, see you soon for new videos. Ciao.
Thank you so much for watching. If you like my videos, please subscribe and don't forget to hit the bell if you want to be notified of the next episode. And if you want to invest in the stock market over the long term or diversify your financial portfolio, I'm offering you an analysis of the 8 European star stocks to have. Thanks again for watching and have a great day.